very fired up for her. All right. So, since we're on the theme of IULs, I'm going to introduce my buddy, Jim Mosley. He rocks. He is one of the stalwart foundational companies, National Life Group on the IUL side. And that product rocks. Like I said, it's my favorite IUL. And I think I like it not only because my premium financing is with National Life Group, okay, but I like the living benefit riders. I think they are better living benefit riders than all the other carriers that we have. And it's pretty cool. So I'm going to unmute my buddy Jim and see if I can get you. Jim, hold on. There you are. Okay, I think you know how to unmute. So unmute.
There we are. Yep. How are you?
I'm doing great, dude. How are you?
Good. Thanks for teeing me up, and yeah, great segue. Thanks, Victoria, for hyping up IULs. We'll certainly, that's good feedback. I'll make sure I reach out to Pam to see what things we can do to make that contracting process flow smoothly. But thank you guys for hopping on and letting me speak to you guys a little bit today. Alex, with your permission, I'm going to share my screen. That way,
yes, please.
You guys can see a little bit of what I'm talking about here. So a few things that I wanted to really show you guys today, really talking about our living benefits. So hopefully you can see my is that screen coming up on your end, Alex?
Yes, sure can.
Okay, perfect. So Alex was asking me to not only talk a little bit about the living benefits and explain those, but even I would say a step before that of, hey, what's the simplest way to explain an IUL? What are some of the right questions that you guys can be asking to help identify who might be a candidate for an IUL? I love this product, and it has so many amazing features that it's easy to get distracted by all the features and try to tell the client, well, hey, here's how the product works. When the reality is most clients don't care how the product works. You've heard me do the analogy before of most people don't want to know how the watch works. They just want to know what time it is. And some of us, like me, might think I want to know how the watch works, and it's only after I've taken it apart in all of those little pieces that I realize I didn't want to know how the watch worked, and now I don't have a watch that works because I broke it. And so the reason I think it's important to talk through of what are the characteristics and how to best explain it is that clients want to know benefits. They don't necessarily care about policy features. They want to know benefits, right? Hey, what is this going to help me, and how is this going to help me and my family be in a better place down the road, and why is this better than what I currently have today? And I think IUL does a good job about that, and it's fun hearing even Victoria's enthusiasm of, yeah, now that all her friends and people that she's talking to, now that they're starting to know about it, they all want IULs. That doesn't surprise me to hear her say that. So let's dive in a little bit more. I will talk about those living benefits and how they come into play, because there are a lot of scenarios where it'd be nice to have living benefits. But focusing in on how to talk about these, I want to start on this slide actually. So hopefully you've seen this puzzle piece before. It's going to be on most all of our marketing materials. Normally it's color coded. We're specifically highlighting the living benefits in this piece, so that become ill section. But normally on our marketing pieces, they're color coded, and that live too long piece at the bottom is color coded in green, which I think marketing did a really good job on that one, because if you think about any three of these puzzle pieces in terms of what could life throw your client's way, of any of the three potential concerns here on the left, most everyone wants to be in the green. Most everyone wants to be in that live too long puzzle piece, right? Now the problem is that typically you don't know which one of the puzzle pieces is going to hit you in the face until it hits you in the face, right? And so then one of the nice things about this product is that you have a product that's going to that's multifaceted. It can solve any of these three needs depending on which one life throws your way. And so that right there is, I think, one big takeaway. As you're doing your fact finders and you're getting to know your clients and what their financial picture looks like, you'll see some of them will have like a cancer policy that they have at work, right? And it only is going to pay, it's only going to pay out if if they end up getting cancer. And so the client's, doing, $5 a month or $10 a month for this cancer policy. And in reality, if they ever leave that job, they're not going to take that policy with them. If they don't end up getting cancer, they're not going to get any of those premiums back, right? It's kind of like car insurance where, hey, we're thrilled you didn't have a car wreck, but no, we're not going to give you your premiums back because you were covered if something were to happen. And so even just from the multifaceted use of, how do you find the money for your client to be able to do these IULs? The fact that the IUL can solve any of these three issues is a big value. That's a big benefit for your client. Because again, when you look at a circle, everything's within the circle, right? There's nothing life can throw your way that's not falling into one of these three categories, right? One of these three things will happen to your client, right? Because if you don't die too soon, that means you're automatically living too long. Then it's just a question of if you're becoming ill along the way, right? So we have the client completely covered in terms of what life could throw their way. Let's get them something that they're going to get their money back and then some, right? And that's how I like positioning these IULs. So again, a good questions to be asking your clients, figure out what their pain points are, right? Hey, what's the biggest financial concern you have right now? That's a great intro question because again, no matter what they say, it lets me know where their head's at. And then now I know, okay, well, if their biggest concern right now is retirement, then I probably want to start on this puzzle piece, right? Whereas if they say, well, Alex, we just bought a house and it's a pretty big mortgage. If something happens to me, I'd want to make sure that the family doesn't have to move. Okay, well, I can still talk about an IUL, but I'm probably going to want to start first on the dying too soon section, right? In terms of the benefits that this policy is going to have, because that's what's most important to the client, right? That's the biggest thing that they're concerned about right now. In terms of, hey, who's a good fit for an IUL candidate? We talked a little bit about this last week on the product call. I try to avoid going to certain ages. Hey, if they're 70, they can't have an IUL. Well, that's not necessarily true. Now, it might be a little bit harder for it to make sense than if they were a younger person. But generally, I like to think of it from a time horizon rather than an age. So generally, I'd like for that client to have at least 10, but I'd prefer closer to 15 years to where they can really let this policy grow, right? I always like to practice my elevator pitch. I don't know if you guys have an elevator pitch. If you don't, then I would encourage you to be thinking on that. It's always fun. You never know who you'll meet in an elevator. Actually, one of my colleagues, probably his biggest group this year is going to be a group that he met their CEO in an elevator. So the elevator pitches really are important, which is pretty funny. But I always like to develop mine and continue to improve. Usually I'll tell people that I help my clients rob banks. So if someone asks me what I do, I'll say I'm an accessory to the fact. They'll kind of look at me. It was really funny until I got stopped by a law enforcement officer in an elevator once, and he kind of stared at me when I told him that. So, but in terms of working on that elevator pitch and being able to tell clients, what you do and what you can help with, again, that's really what it's about. It's about the value that you can bring to those clients. And so, in terms of who might be a good fit, again, it's generally someone that has 10 or maybe 15 years of time horizon to really let this thing grow. It's a delayed gratification play, right? So when you think about in the world that we live in today, right, where there's microwaves and even all of our little kids, I've got a 15-month-old son at home. He can't even talk, but he already wants to steal my phone all the time and look at the pretty lights on it. The fact of being able to help somebody save for their long-term retirement goals, that's hard, right? That's why IUL companies pay you guys to sell these. We know it's not easy, but that delayed gratification conversation is very helpful for the client. And again, when you have all three puzzle pieces, you're getting your money back, right? At some point or another, this policy is going to pay for itself, right? Because if I pay 1 month of premium and I get run over on the highway on the way home tonight, well, hey, that's okay. I just got a big death benefit, right? Although, again, most of your clients want to live too long. Right? So, hey, if we live a long time, we'll turn on a rider that gives guaranteed income that's tax-free for the client's lifetime in retirement. That's a huge, I have policies, we have the variable loans that most of the other IUL carriers are going to have as well. That's kind of the staple of the industry. But we're the only carrier that the Alliance has that has a guaranteed income rider built inside of that IUL. And so, and the cool thing is you don't have to decide now which way they want income. We'll decide at retirement. And so, for anyone that's risk averse, they like that, zero is your hero. You guys have heard Gina do her indexing talk before, but that's powerful value that you're adding to the table on top of the living benefits, which we'll jump into here. Alex, I didn't want to stop. Did you have any questions or anything you want me to expound on this side before I kind of dive into the actual health? Okay.
No, I think you did a great job.
Perfect. So when we talk about the becoming ill, the living benefit side, there's really 4 living benefits that we kind of break ours down into, which is awesome. That means more choices for the client, right? We've got a terminal illness. That one's pretty straightforward. We've got the chronic illness. Chronic illness is the one that sounds and looks like long-term care, but nobody's going to call it long-term care because long-term care people will get upset if you do. But very much for someone that might be in a nursing home or a long-term care type facility. And then you have these critical ones, critical illness, and then critical injury. We actually, the reason I like to hype up critical injury is National Life Group first started offering living benefits back in World War II. I'll say that again because I know a lot of us weren't alive back then, right? National Life Group first started offering living benefits back in World War II. And so it's nice when a lot more carriers today are coming out with living benefits. We really feel like it's been a staple of ours. And that critical injury actually, again, just to say we're not being lazy, that critical injury actually came out in 2017. So although we've been a pioneer, we want to continue to improve our living benefit game. So we added that critical injury with a couple of extra riders. So things to consider when you're talking about our living benefits. Some states are a little bit wonky. Most of them aren't. New York's a little weird. California is sometimes a little bit weird. But outside of that, they're going to be there. And then all the products that you guys are selling with us all have those living benefits. We don't have to worry about that. The table ratings. I'll mention the table ratings in this scenario. So National Life Group's going to do all of our underwriting up front. So what I mean by that is, if you meet a client that says, oh, well, I have disability through work, or I have some coverage through work, a lot of times group coverage, they'll have the numbers up front, but we won't know if they're actually covered or not until something happens. And then they file a claim, and then they underwrite to see if they qualified for the claim, which sounds kind of odd because it's possible that a company might say, oh, well, we see that there are some preconditions here and we don't want to offer coverage. Well, we don't have to worry about that with National Life Group because we're doing all of our underwriting up front, right? So if the client does get rated, then there's a chance they might not get all the living benefits. I will say of all of my departments, again, we're National Life Group's 170 plus old, mutually owned company, super conservative. The most liberal department in our home office is underwriting. And that's a good thing. So even if a client's rated, they will do their best to offer some of those living benefits. Generally, critical is the first one to go if they do get rated. But the nice thing is we're going to know at issue what all they have available, which is awesome. No guessing games there. A quick highlight on the terminal, kind of sounds like it sounds. If the client's going to be passing away, and ours is actually 24 months or less. I only bring that, to be honest, I think most physicians don't. I think most physicians want to hold on to hope. So I don't know that many physicians that say, Alex, you only have 24 months to live. I think most say, hey, let's work on this and get better. And then they say, hey, Alex, you only have 12 months to live. Yeah. But it is one example of how our living benefits are a little bit more liberal than most carriers. That's 12 months or less. Right. Now we can have that debate on how many physicians actually will tell a client 24 months. But again, my whole point is we have some of the best triggers in terms of accelerating these benefits out to you guys. So a cool example from that end. You'll see on all of our living benefits that they can be used at the policyholder's discretion. So that bullet points here on this one, but it's going to be the same for terminal, chronic, critical. I forget the name of the settlement company that does a lot of advertising, but it's my money and I need it now. What is that? JT Wentworth?
Oh, yeah.
So, but again, it works the same way in the living benefits, right? It's the client's money. They can use it however they want to use it for. They can use it for surgery. They can use it to do another trip with their loved ones, whatever they'd want. Again, the chronic one, if they're unable to perform 2 of the 6 activities of daily living, or if there's cognitive impairment. I want to stress that because I think that one, to be honest, I think that one gets overlooked the most when you're talking about any sort of chronic or long-term care type benefit on a life policy. Most of them will have the one on the left in terms of the 2 of the 6. Not as many will have cognitive impairment. So that's going to be Alzheimer's or dementia. In fact, last year, that was our #1 claim was Alzheimer's. So again, know that either of them will qualify on the chronic illness side. So that's pretty cool from that end. And then again, an example of we always want to be on top of our toes. Alex, on your, when your premium finance policy was originally issued, that chronic illness had to be on the books for 2 years.
Right.
And you'll see now that I have updated my slide, now that we have come up with the new products on that new Flex Life, not only for new products, but we actually have gone back and retroactively on all old products. Now the chronic illness only needs to be enforced for 30 days.
Wow.
So Alex, Merry Christmas. You now have, don't take advantage of this, Ryder, please. we want you around, but it does now only need to be enforced for 30 days to accelerate. So that's kind of another cool thing for the client's perspective. Typically, the chronic illness will be paid out up to 24% per year. Chronic's the only one where you could end up getting taxed, but it's only if you take out a ridiculously high number. So that's higher than that IRS per diem limit. I think it's like $135,000 this year. So pretty much, unless you're staying in the Ritz-Carlton of long-term care facilities, you're not going to have to worry about paying taxes on any of these living benefits, which is nice. Also max lifetime limit of $1.5 million. I'll be curious to see that there is some talk that again, we always want to look at our living benefits and how to update them. There is some talk amongst us field leaders to see if we could look to increase that. But again, it's only going to affect those larger face amount policies, kind of like the one that Alex has. So he'll help cheer for us on that one. And then the critical illness. So I won't go super in depth on this. You guys can obviously read the conditions on both the illness and the injury. I will talk about the severity levels. So on either critical illness or critical injury, when we do file a claim, the claims examiner is going to look to see, okay, how severe is this cancer, or how severe is this heart attack or stroke? And so the more severe it is, the more we think it's going to impact life expectancy. Right, again, this is a life insurance company. The more we think it's going to affect their life expectancy, the higher that payout's going to be, right? So no surprise, terminal illness is always going to have the highest payout, right, of all of our living benefits. But then when you look to the critical illness or critical injury, something that's life-threatening is obviously going to pay out more than something that's minor or moderate, right? Again, I know that sounds, it almost sounds cliche, right? There's no such thing as a minor heart attack. But again, we're trying to talk about from a life expectancy perspective. Again, the nice thing about these living benefits is that all of ours are built in already, right? So again, you're not going to run into that client, but let's say Alex runs into a client and they say, Alex, hey, I really like these IULs. I like cash value in the National Life Group. I don't want these living benefits. Okay, well, if he goes in and takes them off, he's not saving at any cost, right? We've already baked them in up front. So that's one, I think, thing that differentiates us as well, is that a lot of companies, as they're now starting to offer these for their clients, from a pricing perspective, they're pricing it in as the client adds that rider. Whereas ours, it's, hey, it's already built in up front. Only if they need to use it will we discount the death benefit to the present value, right? And so that actually, I'll skip ahead. There's some great brochures, and I'll make sure you guys know where all of our living benefit brochures are. But I want to skip ahead on showing kind of how we do this time value of money. So if we were talking about needing $100,000 for a life policy that pays, we're planning on passing away 20 years from now, right? So that client was actually going to pass away in 20 years from now and get $100,000. Well, if they were going to accelerate that money to today's value, right, and now National Life doesn't have the 20 years to grow the money, invest the premiums that the client's paying, that present value today, again, we use a 4% interest rate. Today, that 100,000 is only worth about 45,000. Okay, and so that's how we calculate the living benefits, right? Now again, we're not going to call your client. We're not going to say, hey, the claims examiner thinks your client only has 5 years left on their clock. We're not going to do that. But 10,000-foot view, what's happening behind the scenes is we're trying to figure out, hey, that policy is worth 100,000 when Alex actually passes away. He hasn't yet, which is a good thing. But what is it worth right now? Right? And that's what we're going to offer to the client. So again, pretty cool from that end. There is a way to actually see this or see the projection. Again, we can't see which severity level it is until it happens. But our illustration software will let you look at that projected amount. So clients can be funny when you're talking about suffering or hardship or death. I had one client years ago that said, well, Jim, every man in the family's had a heart attack at 53. I'm going to have a heart attack at 53. I want to know, what would I have access to at 53? Well, we can show that here in the illustration system, right? We would just change that age from 50 to 53, and that would show that amount. So last slide that I'm going to show you guys, unless we have some questions, but I like this piece to kind of show, again, what's happening behind the scenes on living benefits. So we're going to find out the present value of that death benefit, right? Again, time value money. If it's a $100,000 death benefit when they pass away, what is it worth right now? And then we're going to find out what's the present value of the remaining premiums that we're probably not going to receive, because again, the client's going to take the money today, right? So what's the present value of those remaining premiums? We do that subtraction. That's how much we can accelerate, right? So again, I would stress you probably don't want to go this deep with your client unless it's an engineer, in which case that's why I want you guys to know this. But in most cases, again, the client wants something that's fair, right? You guys have heard Chris Norris talk before. We all know that life's not fair, the world isn't fair, but people like the idea of a fair deal. That's what we're doing here, right? It's, hey, here's how much that death benefit's worth right now. If you need it, absolutely, here you go. The other nice thing on ours is it's not an all or nothing decision, right? So again, just in the example here, if the client had $100,000 and our claims comes back and say, hey, present value, it's actually worth about $82,000 right now. Okay, well, the client could take all of it, and if they do, then we don't have a policy anymore, but they have $82,000 tax-free to go, look at that surgery, whatever they need to do, travel with the family one last time, whatever the client wants to do. Or in that second scenario, the client says, well, that's great, but I don't need $82,000 today, Alex. I've got surgery that should only cost me about 40 grand. Okay, well, we can do a partial, right? If we take half of that 82, right, so there's our 41, half, we're now left with half, the other 50% of our original death benefit and our original cash value, right? So it is proportional. So again, pretty easy to understand from that standpoint. I do get that sometimes it's hard to give the client the exact number, but again, that's why I do really like, hey, if a client wants to know, again, you can go in here and change the age to say, hey, at 53 or 62 or whatever, hey, here's what we could expect to receive from a living benefits perspective. So again, pretty cool. Again, in this case, this client's only 30, right? So even the ability to forecast a projection for 23 or 32 years out, it's pretty cool. And then the last thing that I'll say on living benefits is that the cash value is important in terms of determining what that living benefit is. So again, when you see this formula, present value death benefit and present value of remaining premiums, if your client's been overpaying into the IUL, right, trying to generate retirement income, right, tax-free retirement, which is how you guys are doing most all your IULs, right? If they're overpaying, then the how many remaining premiums they need is going to be smaller than someone that's been paying the bare minimum, right? So from that perspective, again, the way you guys are typically running your illustrations renders to the fact that your ABRs are probably going to look a little bit better than if you were running the same death benefit but not paying as much premium, right? Again, it's not rocket science, but like a lot of other industries, you're going to get out what you put in, right? When that client's been overfunding, that's going to give them a better, a more favorable looking policy on either living benefits or, again, ideally living too long. That's where most people want to be. And again, I think that's the big value. I know Victoria, super young. I'm sure a lot of her a lot of her warm market probably, don't have a home or have a couple of kids running around like my natural market does. However, I'm sure some of them have some student loan debt coming out of college. They're already wanting to save for retirement. The fact that you have something that addresses all of the, sorry, I'm going to back up a ton. The fact that you have something that addresses all three of these potential concerns your client has is huge, right? Because again, now they can be setting money aside confidently, knowing that, hey, it doesn't matter which of these life throws my way, I'm going to be protected and have a policy that'll perform well for me. So I'm going to stop there. Alex, do you have any questions that might have gotten texted in, or any? I want to be a wise steward of your time, obviously.
I really don't have any texts. I think you hit it, and this is really has become an important conversation, because right now one of my agents has a client that's looking at long-term care, and so I'm helping him quote a long-term care policy with Mutual of Omaha, and it's like a basic $3,000 a month program for up to 36 months. The total benefit of $108,000. She's paying I think the quote was $244. She would pay $244 a month. She's 64 years old, and it does have 100% home health care and 100% nursing care at home, but she may die. She may not even access all the benefits of the long-term care policy. And in my mind, I'm thinking, man, back when she was younger, if they had a policy like this National Life Group policy, she wouldn't have to be so concerned about long-term care, because the chronic illness benefit acts like a long-term care, and you don't even have to be in a long-term care facility to access that benefit. You have to be chronically ill, meet the 2 activities of daily living test, right, Jim?
Yep.
And then you can access that money right away. So there are so many advantages of not shelling out a policy for this, a critical illness policy for that, because Mutual of Omaha does critical illness policies. They do heart attack or stroke or cancer. You can't do heart attack, stroke, and cancer. It's one or the other. And again, you're paying a monthly benefit for something that may or may not happen. Here, if it happens, you got the benefit. If it doesn't, you got life insurance, right? There, you can, if you don't ever access those benefits, you've blown all your money, just like Jim said, like car insurance. I mean, you were trying to insure yourself against it, but where did that money go if that never happens? So
yeah, and Alex, you bring up a good point. I'm certainly not going to, don't hear me speak ill of other insurance companies. They'll price it to figure out, hey, here's how much we should be charging for, just a home health policy or just chronic illness. But again, going back to that whole living too long, it's almost a psychological advantage I'm giving you, right? I don't want to pay money into something and then cheer and hope that I have chronic illness so that I can get my money's worth on this policy, right?
Yeah.
I want to live too long. I want to know that, okay, yeah, I had it in case I became ill, but I want to live too long and get a guaranteed tax-free, retirement income stream. That's what most of your clients are going to want. So again, from a psychological standpoint, I feel like I'm giving you a leg up on your competition.
Absolutely. Well, Jim, man, that rocks. Thank you so much for sharing with us. I think you really hit what I wanted to get to, was the value and the benefits of this. Besides the tax-free retirement, that this living benefits aspect to it is so powerful. So thank you so much, dude. And gang, there you go. Thanks, Jim. Thanks everybody for plugging in.
Thanks, Alex. Appreciate it. I did just send out my my contact info on y'all's chat, both my email as well as my direct line. I like my direct line because if I'm doing one of these, seminars, I didn't pause you guys to answer any phone calls. If you call me on my direct line, if I'm free, I'll answer and help. If I'm busy, you can press 0 and it'll get you to my internals that can help you guys in terms of case design and running illustrations on your first couple ones.
Yeah, that's awesome. They're very helpful, gang. The first time we encountered this company, I got on the line with them. They guided me through running an illustration. And it was, you know, even though I have experience running illustration software, they're very patient and explained everything. So they really take their time with you on an individual basis, which is pretty awesome. So anyway, all right, Jim, thank you.
Thanks, Alex. Take care.
Thursday, gang, we're going to do our sales call at 11 a.m. I'm going to talk very specifically about goal setting. It's going to be, I'm going to factor in some neuro-linguistic programming stuff in there. So it's going to be real, I don't know, comprehensive, but I think it'll make a difference. It's not going to be your typical boring goal talk. I think it's something that you can really use and set yourself up for 2020. So rock on, gang. Let's get out in the field. Let's work until, you know, till it's time to be with your family and celebrate your family. But don't feel guilty. It's like the no guilt holiday, right? You won't feel guilty if you worked your butt off up until the point where you're spending your time. Then you can enjoy your family. But man, don't have that guilt going, man, I should have done more. Man, that commission deposit was, I was hoping for something more. I hope that fully underwritten policy was going to place, and then it gets declined, and you're like, pucker factor. Man, don't go through the holidays depressed. Get excited because you worked your butt off until that time. So man, rock on. God bless y'all. We'll see you guys on Thursday. Bye now.